In this video, I'm gonna tell you how to buy stocks for beginners. This is gonna be a step-by-step guide and tutorial so you understand everything and be ready to go. Let's do it. Hey there, my name is Ken, here to talk about personal finance and investments. If you are new here, check out other my videos, and if you like, subscribe for more in the future. So you've decided to invest in the stock market, and you even have some ideas about which stocks you want to buy. But how do you actually purchase those shares? Fortunately, the process of buying your first shares of stock online is relatively quick and easy. And here's a step-by-step guide to start your stock investing journey. First, you'll need a brokerage account to buy stock. Consider two main factors when selecting an online stock brokerage. The one is what the brokerage offers. Does the brokerage firm offer every product and service you need? Some brokerages publish excellent educational resources for new investors. Others provide access to stock research and analytical tools. Some online brokerages maintain branches where you can receive guidance in person. Perhaps other features such as the ability to trade international stocks or buy fractional shares are important to you. Not all brokerages offer these. The second thing you want to consider is the user-friendliness of the brokerage platform. Is the brokerage's platform easy to navigate? If you want to trade using your mobile device, then the brokerage's mobile interface needs to be well designed. Many of the largest brokerages allow you to use Play Money to experience their trading platforms before you invest, so try a few to decide which platform do you like the most. And also, most major online brokerages have eliminated trading commissions, which largely takes cost out of the equation when choosing a brokerage platform. Once you've chosen a brokerage, you'll need to complete a new account application. This is typically quick and easy, but you'll need to have photo identification handy, such as a driver's license or your social security number. You'll also need your bank account information if you want to fund your new brokerage account using your checking or savings account. You can choose to open a standard brokerage account or instead establish an individual retirement account (IRA), which confers some pretty nice tax advantages. Another decision you may face is whether to establish margin privilege for your new brokerage account. Having margin privilege enables you to buy stocks with money borrowed from your brokerage. While investing on margin is generally not a good idea, establishing margin privilege can confer some other benefits. For example, with margin privilege, you may begin trading in your brokerage account before your deposited funds have cleared. On the second step, you want to decide which stocks you want to buy. Without going too deep into the many possible methods of analyzing and selecting individual stocks to buy, the next step is determine which stocks you'd like to purchase. A couple of pointers here: follow a buy and hold strategy. Only buy stocks that you want to own for many years. Don't buy a stock just because you think it will perform well over the next few weeks or months. And also, diversify your holdings. Don't put all of your money into just one or two stocks. Even if you are investing only a relatively small amount of money to start, diversify your portfolio by buying a few shares of several different stocks. With the advent of commission-free trading, owning the stocks of many different companies doesn't incur any additional expense. If you are curious about how I analyze some stocks, you can learn more in these videos. The third step to take is decide how many shares to buy. To determine how many shares you should buy, first decide how much money you want to invest in each stock that interests you, and then divide this amount by the stock's current share price. You can find stock prices on your brokerage's platform by searching for either the stock's ticker symbol or the name of the company. If your brokerage trades fractional shares, you can purchase any dollar amount of a stock regardless of its share price. Many brokerages don't buy or sell fractional shares, so in that case, you need to round down to the nearest whole number of shares to determine how many you can buy. As an example, let's say you want to invest $1,000 in Microsoft. The ticker is MSFT. You check Microsoft's share price and find that it's $300. Dividing $1,000 by this share price indicates that you can buy up to 3.3 shares. Assuming your brokerage doesn't trade fractional shares, you would purchase 3 shares of Microsoft stock. On the fourth step, You gotta choose an order type. Different order types exist for stock purchases. The type of order you place to buy stock specifies the conditions under which you want your broker to transact on your behalf. Placing a market order, which instructs your broker to buy the stock immediately and at the best available price, is typically the best order type for buy and hold investors. However, you may instead want to place a limit order, which indicates to your broker the maximum price for stock that you are willing to pay. For example, if a stock is currently trading for 20.5 per share and you want to buy it only when the price is less than 20, then you would place a limit order. Your broker would only transact on your behalf if the stock's price dips below $20. And that's not it. There are a lot of more terms, but don't be put off by all those numbers and nonsensical word combinations on your broker's online order page. Refer to this cheat sheet of basic stock trading terms. Here are some of them. Ask for buyers, the price that sellers are willing to accept for the stock. Bid for sellers, the price that buyers are willing to pay for the stock. Spread, the difference between the highest bid price and the lowest ask price. There is also stop or stop loss order. Once a stock reaches a certain price, the stop price or stop level, a market order is executed and the entire order is filled at the prevailing price. Stop limit order. When the stop price is reached, the trade turns into a limit order and is filled up to the point where specified price limits can be met. Well, there are a lot more fancy trading moves and complex order types. Don't bother right now or maybe ever. Investors have built successful careers buying stocks solely with two order types, market orders and limit orders. Now it's time to place the stock order with your brokerage. To place a stock order, access the appropriate section of your brokerage's platform and enter the required information. Your brokerage will typically ask for the company or stock ticker name, whether you want to buy or sell shares, and the dollar amount or how many shares you want. After you tap the place order button, your stock purchase should be executed in a matter of seconds if the order type is a market order. Your portfolio should immediately update to reflect your ownership of the newly purchased shares. Now you gotta build up your portfolio. This is the final step in this process, is to build out your investment portfolio. Now that you have a brokerage account and know the basics of how to buy and sell stocks, you can keep adding money to your brokerage account and investing in stocks you'd like to own for years to come. And here I want to tell you about dollar cost averaging to buy stocks over time. The trouble with stock markets is that prices fluctuate constantly. You may have your eye on a stock that looks reasonably priced today, but who's to say whether the price will be higher or lower tomorrow? Dollar cost averaging provides a solution to this problem. Buy stocks with a set amount of money at regular intervals and you may pay less per share on average over time. Crucially, dollar cost averaging allows you to get started buying stocks right away with a little bit of money rather than waiting to build your balance. This mitigates the risk you buy either extremely high or low, since you are spreading out your purchases across a long period of time. Let's say you use dollar cost averaging to buy your target stock at $5 a share in week 1, at $10 a share in week 2, and $9 a share in week 3. On average, you've paid $8 a share. Better than if you had mistimed your purchase and gone all in at $10 a share, only to see the price drop. Plus, investing the same dollar amount each time would buy you more stock at $5 a share than at either of the other price points. Buy low and sell high is a mantra for successful stock purchasing you've probably heard more than once, but practicing it can be psychologically challenging and it can be very difficult even for experts to agree what low and high are for a given stock. Automated, recurring stock purchases that use dollar cost averaging help you sidestep the challenge and make investing routine. As a final thought, while it can be tempting to monitor the performance of your stocks every day, especially at first, it's important to maintain a long-term mindset. Certainly, you can and should read quarterly reports and subscribe to news alerts to stay current on each of the companies in which you hold stock, but if your stock prices decline somewhat, don't sell in a panic. And if your stock's prices rise by a few dollars, resist the urge to cash out. The best and easiest way to build wealth over time is to buy shares of great companies and hold them for as long as the companies remain great. Let me know in the comments what brokerage firm did you choose. Here are more other videos about personal finance and investments for you. Make sure to subscribe to the channel, smash the like button and hit the notification bell. See you in the next video.